Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Remember, the last half an hour of trade is where we are at, and the markets have, despite all the choppiness, managed to again continue above 25,200 odd mark. There's a 30-point uptick right now on the Nifty. What's really aiding the sentiments right now? There are some of the sectors that are definitely supporting. You have PSU Banks, that's the top moving sector in the trade right now, almost 2% higher. Media stocks are up, real estate, even the IT stocks, which have been such big laggards in the last few sessions. That's also seeing some pickup happen, about 0.75% odd or so. FMCG autos have also picked up pace. Even the broader markets that were the outperformers are holding up right now, 1/10 to 2% higher in trade. Barring pharma and metals, the rest of the sectors have all pulled up. Remember the India VIX, that's also down by 2.2% at around 11.2 levels. So that's also comfortable right now. What's moving on the Nifty? M&M is the top mover, 2.2% higher, 3,198. Wipro has moved up. Nestle is higher. SBI is also among the top movers. 831 can be seen on this one. Tech Mahindra also ahead of earnings. Infosys, Adani Ports, Asian Paints. These are all the stocks that are holding higher in trade. But what's not doing well? Shriram Finance is declining. You have Pharma that's down, Eternal, Tata Steel, Tata Motors. These are the stocks that are still down in trade. In the F&O market also, if you see, there's enough and more action. Patanjali Foods is higher in trade. Remember, tomorrow the board meeting might indicate as to what could be the bonus ratio and the bonus announcement that could come in. Ahead of the announcement, you can see some pickup right there. Uno Minda, Tata Power, these are some of the other stocks that are also hovering higher in trade. But let's welcome our guest on board, Mr. Sharad Avasthi, the head of research at SMIFS. He will be joining in on the program and he's here with us to share with us his views on the markets. Warm welcome to you, sir. Good afternoon to you and thank you so much for taking the time out. Let's start off by understanding, what's happening in the earnings front. We've had some earnings already come through, especially from the IT pack. What do those initial signs tell you, sir?
Well, Sakshi, good afternoon. I think, the initial results from the IT pack, particularly TCS and HCL Tech, I think they have been a bit disappointing. But I think the silver lining could be, that the trade, the number of new deal signs and the trajectory for future looks much better for these companies. Though the flip point could be, that is being debated is that very low growth rates are something that you're not happy with most IT companies. But from where I see, I think most Indian IT companies are going through a transition phase. Where most probably over the next year and a half, as things stabilize, particularly in the US, I think there is a lot of probability that you would see a ramp up that could result in much faster expected numbers. So if you are a conservative investor, you can still wait for another, 5-6% correction and then maybe accumulate on the IT stocks, the frontline names that is. Individual stories on the smaller side might be available, but the well-known frontline names, larger companies, I think maybe you can wait for 4-5% correction and then probably go a bit aggressive in terms of accumulation. But I think long term there is a high probability, that once certainty returns to the US, most probably in a month's time or so, there is high probability that next quarter onwards, the commentary, etc., and the numbers for this quarter also should be much better vis-a-vis what we have seen in the last quarter. So I'm expecting a good recovery, but maybe prior to that, because of the fallout of this quarterly numbers, you could see some slowdown or some, nagging effect in these stocks till the next quarter numbers come out. So till that time, use those dips to accumulate. Beyond that, I think the long-term trajectory remains strong. And once the long-term alignment that they've done with regard to consultancy businesses, etc., start showing up in the numbers, the AI transformation starts showing up in the numbers, a larger base adoption starts showing up. I think there is high probability that these IT stocks could get positively re-rated.
Okay, positive re-rating is expected. Let's dive a little deeper into some of the other pockets, and then maybe we'll circle back to the IT pack to delve a little deeper onto the upcoming earnings as well. But one major news flow that's just got confirmed about half an hour ago is on State Bank of India, sir. The board has now approved raising of 20,000 odd crore rupees through bond issuance. and this will be SBI's major capital raising program since 2017, and 20,000 crore rupees via bonds is what we do know of as what is being planned. It could be announced anytime this week is what we are given to understand. Your own sense, sir, how would you look at this announcement and QIP from SBI and a large fundraise activity that they are undertaking? In May itself, they had already indicated that the board had approved about 25,000 odd crore rupees of fundraise, either via way of bonds or even equity. FPO was also being seen as a possibility. Finally, it's coming in as a bond issue. The 20,000 crore rupees will be raised via Basel III compliant additional, tier 1 and tier 2 bonds this time around. How would you look at it, sir?
Certainly positive. I think finally maybe we are looking at an era probably where we will have very strong advances growth, and obviously SBI will lead it, being the largest bank in the country. We are optimistic that most probably advances will look much better. Q1 data till now that we have seen seems to present a wholesome picture, particularly on the banking side. Generally, the Q1 is a slow quarter, but this quarter advances growth has been decent. So we are expecting this performance to further improve over the next quarter or so. We have been talking about a consumption boost also, tax cut boost also, and the pay commission increase boost also. So all that should uh, cook up very well. I think even the private capex side is expected to do very well over the next 4 5 years. That should further support bank lending. And I think the NBFC relaxation is another positive for these banks. I think the PSU banks are also focusing very aggressively on the credit card businesses also. So I think microfinance improving, MSME improving, capex cycle improving, consumption improving. So the retail loan part of it should continue to grow. So I think all the boxes are ticking for most PSU banks as well. I think valuations are comfortable. What is SBI trading at 1.5 times price to book? Some asset monetization could be an icing on the cake. So I think, yeah, it's positive. I think I consider that them going ahead with such a big fundraise is very clearly indicative that the advance scenario or the lending scenario is improving in the country and expected to improve further. In terms of valuations, if you look at what we might be accumulating 150 rupees kind of earnings over the next 2 years, some dividend adjustment here and there, trades at even 1.5 times, which I seen is very attractive. Ideally it should trade at something around 2 times. That alone leaves you with 30% upside. But considering that it trades at these valuations also, I think what are you looking at, 115 to 1.5? So you could be looking at targets of around 1050 maybe on SBI. So I think it's a good bet to have on your side. Most of the means external indicators or the macro indicators are very positive for banking. Valuation comfort is there with SBI. You have a size comfort as well. So I think it's a good story to bet on.
Good story, and upwards of 1,000 kind of targets could also be seen. Any ideas, sir? Could the fundraise happen at a discount to the current market price? What are you expecting there?
No, I think this was largely a bond issue we are talking about, right?
Yeah, absolutely. So, do help us understand, Mr. Avasthi, they had taken 25,000 crore rupee of an approval. This is a 20,000 crore rupee fundraise that could happen. What about the rest of it? Do you think that could also come in by way of FPO? Will there be a need beyond this as well?
Uh, Maybe not for the next 1.5 year. Maybe beyond that, they might look at it again. But over the next 1.5 year, I don't think that is going to.
Okay, and when we compare the trajectory of SPI vis-a-vis the other, of course, this one has been a leader, and we've discussed this quite a lot with you already in the past as well. But when we consider the PSU banks as a whole, of course, SPI is always seen as a core portfolio stock. What about the other players within the PSU banks?
I think it's the same story again. Valuations are comfortable. Most of them are trading at what 0.91 times price to book. But I think it's better to stick with the larger names. The Bank of Baroda, PNBs, and the Canara banks. I think they are good long-term stories, and I think the credit cost cycle is more or less favorable from them. And with the NBFC relaxation happening, these companies could grow at a rapid scale. and a large part of the re-rating could be, on account of the improvement in price to book multiples there. So I think these are all three, four good stories. Bet on the frontline stocks. They seem to be good. We were earlier talking about Union Bank, etc. But I think this quarter numbers have not been very comforting. But I still believe, yeah, in the long term, the likes of Union Bank, UCO Bank, even they could do good. Usually they have been on the wrong side of the credit cycle. But I think this time around, most PSU banks have absorbed that. So from going ahead, I think most PSU banks should do pretty well, play a bit of catch up with respect to what private banks are quoting at.
Okay. Let's also discuss the private sector banks. At the same time that we're discussing the banking story, HDFC Banks came out with the announcement of a discussion on a bonus issue that could happen along with the results this time around on July 19th. And this time around there could be also a special dividend, interim dividend, that could be also discussed too. This could be the first ever bonus issue, if at all, if it is approved by HDFC Bank. How would you really see this as an opportunity for retail investors?
Well, I think, yeah, float increases, prices are lesser, so maybe more attractive for some retail participation. But I think in the current age of DMAT, it doesn't really matter much. So, you can even buy one share. So there was a time when you had to buy 100 slots, so that was a different task. But nowadays, I don't think it's very material. It's just a balance sheet entry. Yeah, float wise, it may increase a bit. That's something positive if you are just looking at quantities. But I think the largest story for HDFC Bank is the improvement that's happening, across the board for them in terms of, the aggressive growth stance that they have taken. So maybe finally the merger related issues that were visible in the quarterly numbers from time to time have now subsided, and the merged entity will now show a much smoother growth path going ahead. I think that would be the major trigger that would result in a lot of re-rating for HDFC Bank. Though at 2000 rupees, I mean, what we are working with targets of around 2050, 2100 maybe. But if the numbers do ramp up positively and show up some positive sign, there is a possibility that there could be some re-rating on HDFC Bank. Uh, but I think at these valuations, it could now from here on, you can largely expect it to be a market performer rather than some huge outperformance from HDFC Bank.
Okay. What about HDB Financial, sir? This is for the first time we've seen the earnings since it got listed as a demerged entity. The net profit fell by about 2% at 568 odd crore rupees. There is a dampness that we can see on the stock price as well. This is despite the revenue surging by 15 odd percent as well. Any suggestion on HDB Financial? What do the earnings point out to?
I think for HDB, we have to be very clear that this is largely in terms of valuation also. I think we spoke about it after the listing. I think I continue with my view that maybe long term it's a good story, but I think the credit cost issue that they were facing, the year prior to the IPO numbers, they had some credit cost issues. So unless and until they can address it, and that starts showing some improvement, I think it would be hard for them to command 4.5 times price to book. Growth, I don't think will be a problem, but I think the way the credit cost had escalated in the last 1.5 year, as soon as the bank starts culminating on that, and you start seeing the credit cost coming down, I think then probably you could see another 10-15% kind of jump because of the credit cost improvement. But prior to that, I don't think you are looking at a very strong re-rating cycle for HDB from here.
Okay, fair point. Along with HDFC Bank, we are also seeing Patanjali Foods in action, sir. That's also about to announce a bonus, I believe. Tomorrow is where their meeting is, and this also could be Patanjali Foods, first ever bonus announcement itself. 6% higher at 1850 is what Patanjali Foods is currently trading at. How would you look at this aspect? After a long haul, we are seeing some action on this one.
I think initially there was a period where it was trading at very attractive valuations. Then some movement has happened. I think growth over the next 2 years is expected to be one of the best within the industry. The nutraceuticals part of the portfolio is something they're focusing on. I think next year they are expected to report something around 48, then 58. So I think this is one FMCG stock where you're seeing strong growth over the next, 2.5 years. And I think now, in terms of size, also it has become material. So I think it's a good story to have, by having it at the next 60, 16 to 30, 35 times. So yeah, maybe another 300 400 rupees kind of upside you can expect if you're optimistic on it. But I think it's a rare combination within the FMCG pack where you have growth as well as safety. So I think, yeah, possibly you could be looking at targets of around 2050 2100.
Okay, fair point. Let me just go back to the IT discussion that we were doing, sir. And today is when we will see Tech Mahindra's earnings also come in. See, my colleague is now joining in on the program to help us understand what could we expect from Tech Mahindra's numbers. Already two of the large caps are out. Let's see whether Tech Mahindra can actually spur any kind of a surprise. Asim, what do you have from what are the big expectations?
Yeah, thanks, Sakshi. So the earnings season for the IT sector so far has been quite a muted one, with the earnings for TCS and Tech Mahindra trickling in. Now today, the key things to watch out for the Tech Mahindra's Q1 earnings are FY26 long-term sales growth and margin outlook, impact of the ongoing political and macro concerns on Tech Mahindra and its clients, telecom enterprise segments demand outlook, demand commentary related to 5G technology, new business total contract value wins, deal pipeline and client decision making for same. Coming to the brokerages, Motilal Oswal expects a revenue decline of 1% on a quarter-on-quarter basis in constant currency terms due to a muted recovery in telecom and manufacturing. While the communications vertical has stabilized, the recovery may take time, the brokerage said. It also expects margins to rise by 20 basis points supported by lower subcontractor costs and SG&A efficiency. It says that deal wins have picked up pace with Tech Mahindra outperforming peers. EBIT margins it expects to rise by 20 bps. It has a price target of rupees 2050 with a buy rating on Tech Mahindra stock. Another brokerage which we have is JP Morgan. It expects soft quarter for Tech Mahindra supported by Forex with limited chances of guide ups. It expects revenue to rise by 1% due to cross currency tailwinds, driving a 1% earnings upgrade across estimates through financial year ending March 2028. It also says that while signings are likely to remain tight, pressure from AI deflation is likely to filter through client demand for price cuts that is likely to keep revenue conversion light. JP Morgan has a neutral rating on the stock with a price target of rupees 1500. Okay. The next brokerage we have is Phillip Capital. It expects the constant currency revenue to decline 0.5% sequentially. It says that communication verticals is to be impacted by Comviva seasonality, while enterprises is to be impacted by likely softness in manufacturing and high tech. Phillip Capital expects margins to expand by 50 basis points led by efforts under Project Fortius. It has a neutral rating on the stock with a price target of rupees 1450. Another brokerage which has commented on the preview is Equirus. It expects a quarter-on-quarter dip of 0.8% in sales in constant currency terms in dollars, considering seasonal softness in Comviva and continuing softness in demand from some of the high-tech clients. It also expects EBIT margins to improve by 39 bps on a quarter-on-quarter basis, reported largely led by cost optimization efforts and some currency benefits, which will be partly compensated by investments.
Sure. Okay.
Yeah,
all right,
thanks.
Asim. Thanks a lot for sharing all that update and the brokerage house's expectations on Tech Mahindra. Softness on the top line, whereas some expansion on the margins front is what we can expect. There is also an expectation of a decline on the revenue guidance for FY26 as well. That's something that most of the brokerage houses are looking at. Let's get Mr. Avasthi to talk about Tech Mahindra now. Sir, we have seen past 6 months year-to-date performance again has been sluggish for Tech Mahindra yet again. Vis-a-vis the large cap players, how do you see a Tech Mahindra, playing out, sir, within the IT pack?
See, in the frontline names, I think two names we are focusing on: LTIM and Tech Mahindra. Both have individual triggers. LTIM has merger synergies that might come in. For Tech Mahindra, I think the change in management in the BFSI segment ramp up is something that we are closely monitoring. For them, BFSI was always a very small domain. So I think with this new management team change, there is a high probability that they could ramp up BFSI. So I think that is one place that we are looking at. A lot of changes they have integrated within the company. So I think in terms of growth, this could be one company that could surprise you. Some on the year-end side, the Coforge and Persistence probably will have better growth rates. But within the frontline IT names, I think Tech Mahindra could be one that could surprise you with growth rates. And I think our targets would conquer with what you were suggesting right now, somewhere around, 2000, 1900 kind of targets. In terms of quarterly numbers, yeah, some expansion on the EBITDA margin. We are also expecting muted growth. But I think the forward trajectory that they guide for over the next 2, 3 quarters, I think that will be very interesting. I think Q3 onwards, we will start seeing good ramp up in EBITDA, etc. for these companies, for Tech Mahindra also. So I think, yeah, we remain positive. I think valuations are comfortable with the good growth rates. So even if you get a dip post this quarterly numbers, I think beyond the commentary, we will not be very negative. So I think if you get a dip after the quarterly numbers, in case it disappoints a bit, that should be used to buy into it with targets of around 2000 or 2100.
Okay, fair point. That's as far as Tech Mahindra and its expectations go. Let's talk about the auto pack at large, sir. Have you got a chance to get a glimpse of the latest Tesla, sir, in Mumbai that got launched yesterday in the showroom? We had actually seen in Delhi here a lot of news stories that were flowing. Our own reporter did catch a glimpse there as well in Mumbai, and help us understand your new thoughts on the auto space at large. Is any disruption on the way, especially when it comes to the large EV, SUV premium players are concerned?
I think in the price band that we are talking about, I think none of the listed players have much of an impact there, barring probably, Tata because of the JLR exposure. But there also, I think on the EV side, we don't have that kind of competition still. So there we are more or less dealing with JLR transformation that's happening at the international level. And on the domestic side, I think even if an Avenir does get launched, I don't think it will be a 50, 60 lakh kind of budget car. So Tesla would largely be dealing with the BMWs and Mercs of the world. And I don't think any of the Indian competition is impacted so much by this launch. And I think, yeah, the premium market might receive a bit of a shakeup because we have a large brand affinity towards Tesla. And certainly, I think competition is always welcome, and good competition really leads to your improvements as well. But I think at the price point at which most of the listed companies like Mahindra, Tata, etc., are fighting it out or jostling it out, even for that matter, Maruti now. I think Tesla is way beyond that. So for the listed universe, I don't think there's much impact from this Tesla launch. And yeah, the premium side of it, that might get impacted.
Okay, got that. So that's the auto pack for you that you could be focusing on. I'll bring in some small, some other key sectors as well. Cement is catching my attention. In the broader markets, you can see Deccan Cements that's at a 20% circuit. You're also seeing some considerable amount of moves on NCL and on KCP as well. Sagar Cements is also higher. These are largely South India based cement companies, and most of them are also rallying because of course Q1 is pointing to some improvement. Remember, in south of India we did see price hikes also come in over the last couple of months for cement as well, so that could also have been a major trigger. There is also a lot of talk about further consolidation in this space. We've been seeing some amount of M&A activity over the last 1 year on the cement pack, and that's bringing the attention back on the South-based cement companies. Have you been looking at this in your research as well, Mr. Avasthi?
Yeah, I think Dalmia Bharat we have been recommending for quite some time now. That is the larger player which has a lot of southern exposure. India Cements post this deal doesn't really make sense. And the rest of the pack, I think these are much smaller companies here and there. But I think even if more consolidation happens in South, maybe Dalmia would be a front mover because of the, disappointment they received with respect to the JP deal. So I think, yeah, if I have to bet on the South Indian cement recovery, I would rather be betting on with Dalmia Bharat rather than the smaller names. But yeah, most of the smaller names might provide you with very good results this quarter because of, as you mentioned, higher prices in Southern India.
Okay, fair point. So that's the expectation as far as cement players are concerned. Some of the other names are Saurashtra Cement also, that's also on the buzz. So many such names that are actually in the focus right now. Let me also talk about some of the other aspects. Let's discuss FMCG, sir, largely. Nestle has been in focus. ITC is coming back in focus. We are seeing some action back on the entire space right now. Are you looking at FMCG any fresh moves here, or are you skipping this space completely, sir?
Not across the board, and particularly not so favorably looking at the frontline names. Though Nestle, Lever, after this management change has management shift has seen some improvement in outlook, future outlook. But I think at these valuations, I don't think I would be very comfortable buying into Lever or a Nestle. Rather, I think with the second line of FMCG companies that you want to bet on.
Okay. Let's also discuss hospitality now, sir. It's been long since we've discussed this space with you. ITC Hotels just came out with the numbers as well. It reported a 54% year-on-year growth in its Q1 profit that we've seen, rising to 133 odd crore rupees. So the profitability has been, definitely something to cheer about in this earning. Revenues for the quarter again have stood at 816 odd crores. This is also a jump of 15% odd, for the company as well. And when we look at even beyond the surface, even on the EBIT front, there are some increasing improvement that we have seen over the last year, same quarter as well for the company. Although the company has incurred higher expenses in Q1 at 675 crores vis-a-vis 596 crore rupees that was seen in the same quarter last year. Definitely the stock has also been celebrating this jump in both profitability as well as when we talk about the revenue front too. Any suggestion on ITC Hotels, sir? Again, after listing, this is one of the early earnings that we have got for this one.
Yeah, I think when we compare ITC across the spectrum of hotels that are available to us, I think in terms of property, etc., it remains a premium listed property. You can only compare it probably to something like an Indian hotel or an East India hotel because of the locational moat and the property moat that these companies have. But I think in terms of valuation, it's roughly trading at fair value, fair to full square valuations. We can't see much upside from current prices. I think I would rather be happy betting on something like a Royal Orchid or Asami Hotel if I want aggressive frontline property growth. But ITC, etc., I think, yeah, temporarily it might look very attractive, but at these valuations, it is trading at roughly fair and square valuations. It's very hard to find further upside. I think it's a new listing, so a lot of data is still not available. But I think over the next, 1.5 year, there is high probability, that it is 24-25% growth. At the bottom line level, you are looking at an EV/EBITDA of around 32 times next 12 months. So I don't think there's much left on the table for an ITC hotels. I would rather be betting on something like a Sami maybe or a Royal Orchid if I'm looking at valuation comfort and growth combined. The frontline hotel stocks, I think they are fairly to squarely valued at current valuations.
Okay. What about the recently listed ones, Leela? Is that still off the radar?
No, I think I told you earlier also, maybe that is something that is going to surprise us because, the IPO was very lackluster. People were not very hopeful of getting anything out of it. But now some reports have started trickling in. I think, again, that is one space which has a lot of, one company which has a lot of moat in terms of the properties that they have. And I think what I looked at in terms of what growth, etc., they were targeting in the DRHP also and during the IPO also. I think that is one story where you could have, 20-25% kind of upside from current levels.
Fair point. All right. It's 3:29. We'll let you go, sir. Thank you so much for being with us and for sharing all your thoughts and insights. Always appreciate your time. Thank you. All right, 25,201 viewers, just a few seconds and you will actually see the market shut shop now. The markets and the bulls will definitely try to hold above that 25,200 odd mark. Right now, it seems like just about 6-7 odd points higher is what we are closing in at. PSU stocks in terms of banks are higher. IT, Realty, Auto, FMCG, oil and gas, top 4 or 5 sectors that moved up. Metals declined. Pharma, banks, including the private banks and the financial services, they declined in trade, but M&M was the top mover today. Wipro followed. Tech Mahindra also ahead of its earnings moved up. Nestle, State Bank of India, Infosys, Adani Ports and even ITC among those top movers. In the PSU stocks, it was the oil and marketing companies. You can see HPCL driving up 3%. IOC, BPCL also higher in trade. NHPC, NMDC, Power Mining, all of those stocks also up. Patanjali Foods definitely a surprise one. Uno Minda, RBL Bank, these were the ones that were definitely higher. We talked about the defense, the cement names, Deccan Cement, that was higher in trade, 20 Microns, SMS Life Sciences, you also had Tilak Nagar Industries as the name that was higher in trade. Names like even Unichem Laboratories, that also moved up after a long haul. This one is also moving up. Coffee Day Enterprises, some strong move over the last couple of sessions is what you're seeing at as well. All right, at 3:31, we'll leave you at that, but do stay tuned on to Business Today Television. We continue to get you all the news and coverage from the world of business and finance right after the closing hour as well. Stay tuned. Hello and welcome. You're watching this earnings special conversation on Business Today Television. I'm Sakshi Batra, and this edition we will focus on HDFC Life's Q1 numbers.